Hello everyone, welcome to this week's forecast video. Let's break down the key economic news releases this week and what you need to watch across markets from forex and bonds to equities. Before we begin, please note that trading forex and CFDs involves a high level of risk and may not be suitable for all investors. The analysis and opinions shared in this video are for educational purposes only and do not constitute financial advice. Past performance is not indicative of future results, so always manage your risk carefully and trade responsibly. So, Tuesday, we kick off the week with US auto sector snapshot, that is, US domestic vehicle sales. Vehicle sales give us an early gauge on consumer demand strength and discretionary spending. Healthy vehicle sales can support the bullish sentiment in equities and the US dollar, while softer figures can suggest slowing down demand ahead of big labor and inflation releases. So on Wednesday, actually Wednesday is a major midweek data day. ADP employment report. Actually, this is an early look at private sector job creation before Friday's official payrolls. Then we have ISM non-manufacturing composite. Actually, this tracks whether the massive US services sector is expanding or contracting, a major driver for the dollar and risk assets. Eurozone CPI. The first inflation print from Euro for the month. For this month, CPI is a key focus for ECB expectations and euro sentiment. Together, these figures give a comprehensive view of labor trends, economic activity, and inflation pressures, all of which can create midweek volatility in forex pairs, equities, and other markets as well. Thursday is packed on the policy front and consumer-related data. Actually, Bank of England meeting. This is very important because markets will watch for any shift in Bank of England's stance on interest rates, especially given persistent inflation dynamics. Then we have Eurozone retail sales. This is a read on European consumer demand, important for growth expectations. ECB meeting and policy decisions. Actually, this is a major event. Even if rate stays unchanged, the forward guidance from the ECB can swing euro crosses and European equities. So we need to keep an eye on all these news releases. This combination of central bank policy and consumer behavior often leads to heightened volatility in the euro and GBP pairs, and also in the bond markets as well. Then Friday, actually, Friday is one of the biggest data days of this week. First, we have a US employment report for January. This is the most watched macro release every month. This includes non-farm payrolls, unemployment rate, and we have a University of Michigan consumer sentiment. This actually measures consumer attitudes towards the economy and spending intentions, a sentiment cue for risk assets. Then we have US consumer credit. This shows how much debt households are taking on, which can influence future consumption and spending trends. Then we have Canada employment rate. This is important for the CAT pairs and often influence Bank of Canada expectations. Then we have Japan leading indicators. This is a signal for future economic activity in Asia affecting JPY and broader regional sentiments. So these are the news releases that we have for this week, which might impact the market. So we need to keep an eye on these news releases. Now let's get into the technical forecast of AUD USD. Actually, on the weekly chart, we could see that the price, which was an bearish trend, has moved higher and has broken above the most recent downtrend line. So this is a sign favoring the bulls, and also the price has broken above the last high, as you can see. I have marked it here. So these are signs favoring the bulls, and I personally think the bulls are back in action based on the weekly chart. Now, moving down to the daily chart, we could see the price is in a strong bullish momentum here. As you can see, the price has also broken above the strong resistance zone and is holding above it. So, the daily also has signs favoring the bulls. In addition to this, the MACD indicator also supports this view by creating higher highs. So the price has created higher highs, and also the MACD indicator has created higher highs, supporting this bullish view. Now let's move down to the H4 chart. On the H4 chart too, the bulls are definitely on the run here. So I personally expect the bullish run to continue further in the short term. So what I expect here is basically I expect pullbacks towards the marked strong support zones that I have marked in yellow. So I expect pullbacks towards these zones and then the price to continue higher further. So now let's move on to the next instrument, which is the Euro JPY. On the daily chart, we have a bearish divergence in play. What I mean is the price has created the higher highs, whereas the MACD indicator has created lower highs. So, which is an evidence favoring the bears. Basically, I expect a short-term bearish run here. Moving down to the H4 chart, we could see that the price has broken below the most recent uptrend line, and currently it looks like pullback is happening. And also, the price has created lower lows. The MACD indicator has supported this view by creating the lower lows as well. So the bears are in action based on the H4 chart as well. Now moving down to the H1 chart, after the strong bullish move, currently it looks like a pullback is happening. So until the two strong resistance zones that I have marked in yellow holes, I expect this bearish run to continue higher, continue lower further. So these are my technical forecast on AUD, USD, and Euro Yen. Uh, I wish you a wonderful trading week ahead. Hope my forecast video will help you with your trading. Until I see you in the next video, it's Arvind Akash